to Happen by David Weiss. And I love that book. I'll pick it up and I'll just like open it up to a certain place, any place, and I'll just start reading. It's an absolute gem. And you heard Dr. Gary say in his segment that he was mentored by David Weiss. And you know that Richard D. Wyckoff was very much an open person, an educator. He wanted people to benefit from this knowledge and this information. And the people that followed him, such as Hank, such as David, have followed in the same footsteps, and they're very generous with their time and their experience. David Weiss is a trader and a market analyst with 45 years experience in the futures market. He is considered one of the world's leading practitioners of the Wyckoff method, particularly as it applies to intraday trading. His most recent book, Trades About to Happen, a modern adaptation of the Wyckoff method, Wiley & Sons, illustrates Weiss's application of Richard Wyckoff's tape reading techniques to today's volatile markets. Weiss has developed several Wyckoff-inspired charting tools involving wave charts and volume, along with unique ways of using point and figure charts. Lastly, Weiss mentors traders around the world on his approach to using the Wyckoff method. And his website is weissonwyckoff.com. And David Weiss, we are so happy that you're here with us today.
Thank you, Bruce.
So,
it's a pleasure to be here. Can you hear me?
I can hear you perfectly. And we're just, it's just a thrill to have Hank Pruden and then David Weiss on the same program back to back. This is a legendary moment. So we're so thrilled you're here.
How do I get my charts up here?
Well, take your time. There's no rush.
I see. I don't know how.
Oh, can you just
Just bring it up, huh?
Yeah, just make your charts the active screen. There they come.
Yeah, here we go.
Yeah, perfect. They look great. And we're here if you need anything, David. And we'll just.
There's something wrong here. Here we go.
There you go.
This is it.
That's it. It's perfect.
Well, thank you, Bruce.
I'm going to mute myself, but I'm going to be here if you need anything.
All right, I appreciate it. I may need some. You know, I'm getting older.
Well, we're getting wiser.
Yeah, that's the best.
We're all on the mastery path.
All right. Well, as Bruce said, as he read from that little biographical sketch, I've been doing this since 1971. And today I want to take a different tack. I'm going to show a lot of wave charts, but I want to show how they look and how they can be read on a variety of charts. I don't look at tape reading charts anymore. I have something that resembles it. But I do look at point and figure. It's a great part of what I do. Of course, bar charts are first and foremost. And Renko is also something that I learned about in the last 10 years or so that I find very interesting, very revealing. I think if Wyckoff were alive, he'd be amazed at the information on those charts. And to a lesser degree, range bar and volume bar. And equivolume, which I think is very useful. Unfortunately, I only have access to daily equivolume charts or weekly, but no intraday. But anyway, with that said, let me show you how I started with the Weiss wave. I've shown this before in one form or another. What turned me on to thinking about putting a market in waves was Wyckoff's tape reading chart. This is a 1/8 point tape reading chart, or in other words, it's a 1/8 by 1/8 point and figure chart. So it's the minimum fluctuation. And I found that very useful because it captures uh, the precise highs and lows of the various swings during the day. And what I did when I started studying these charts is I modified them. I'm not going to show all that, but I made it into a point and figure on a piece of paper, or a line chart on a piece of paper, and I totaled these volumes. These are in hundreds of shares at each price. And you can see on this upwave, to move up to 41 and 3/8, there are 3,100 shares on the total up move. All right, and then we have a large sell-off on 3,500 on this downwave. But this is what's interesting. Look here, we go up on 4,900 shares, more volume than any on the chart preceding, but it only gains 1/8 of a dollar, an eighth point. So what does that mean? Well, the inference is that there was a great deal of effort on this upwave and there was very little reward. And what does that mean? That means that somebody used this upwave to get short. And you know that as you watch the character of the next upwaves. Notice these upwaves, how many of them are just 100 shares, the individual plots. So that's a good sign that the market is running out of demand. Wyckoff went short in here, and he put his sell stop here, and then he moved it to here, and then to here, and finally to be stopped out at the end of the day, right there. Well, I took this concept, and I tried to emulate it, but I couldn't do it. I couldn't make a chart from every price change. If I did, it would be as long as a couple of football fields, and I wouldn't be able to see the forest for the trees. So I did this, and this is a more modern chart. I took 5-minute data, 5-minute closes. This is the S&P E-mini, and I made a point and figure chart, 1-to-1 ratio out of every tick. In the S&P, the minimum tick is 0.25. For those of you who traded, it's worth $12.50. Well, I have the total volume. It's calculated automatically by this software, but I used to do it manually. I would add the volume. All right, and you can see this lift off here and how much volume we had. Not much selling pressure. We go up again, not a whole lot of buying, but there's no selling pressure. And now we go up again, and there is an increase in buying. But look at the last upwave. What do we see here? What are the concepts here? Obviously, you can see that the force of the buying is diminishing. In addition, a great Wyckoff concept, shortening of the upward thrust. So you already know at the completion of that wave that we're running out of demand. But we don't see supply until this downwave. Where is the little cursor? Let me use the pointer. On this downwave, oh, this machinery. Oops. I'm trying to draw on here, but all right, anyway, on this downwave, look how much selling came in. There's more volume on this downwave than on any downwave on this chart. So we see that the thrust is shortened. We see that demand has diminished, and now we see supply. So what's it going to do? This is the high day 2 weeks ago in the S&P, and we've never been higher. But now you know we're using 5-minute closes to create this chart, so we don't know the precise highs and lows. Well, I'll get to that. Look at this chart. Now this is what my wave chart looks like without the 5-minute bars on the chart. This is exactly the same as what we saw. In other words, if you make a wave chart in which if you make a point and figure in which the box size is the minimum fluctuation, it will have the same waves as on the wave chart. But here you can read the numbers very nicely. You can see how the volume diminished on the last up wave. We went up on 47,000. We went up on 135,000. We went up on 64,000. And we went up on only 7,000. So, and that is the smallest amount of upwave volume since the day session began at 9:30 Eastern. So it was a clue that we were running out of demand, but you didn't know it was over. Here's where you know the market has encountered supply. And so what I do with the Weis frame is I look for, in this case, a bearish change in behavior followed by a relatively low volume pullback, and preferably shallow. And so if you didn't go short as it turned down, you could go short on this wave, put your stop there, and that was the first piece of that day's down move. We went up a little bit and then down and so on and so on. But now, with the aid of a friend, I've got something different. Now I have a point and figure that's a 0.25 by 0.25, made from 5-minute closes, but it has wicks on it. In other words, I can see that on this down wave, the market, before it closed, remember this is made from closing prices, so before we closed here, we actually traded up here, but this is based on 5-minute closes, so it didn't close there, it closed here. So you don't see that on this chart. You don't see the high that was made on this chart above those highs. So this is almost the same as Wyckoff's tape reading chart, but it's not made from every tick. You see? But this is the closest thing I can come to it. And look how it turns down again. We go down on 34,000 and we only go up on 8,000. We go down on 49,000, only 6,000. We go down on 58,000. Look how shallow it is. Look at the upwave volumes, 24, 13, and 4. There's no demand. So if you didn't get short up here, there were still plenty of opportunities. And on this one-to-one point and figure chart, I'm doing it differently than Wyckoff did it. Wyckoff would not put a single plot in a column. He would put this up move or these X's on top of that. But if I do that, I can't see the down volume and the up volume on the same column. So I do them separately. But I like that anyway because it shows me how little movement there was. How little movement there was right here on this 9,000. All right, well, let's go on. Now this is a 5-minute crude oil chart recently. And, you know, I love bar charts, but they're ambiguous at times, particularly 5-minute charts. You can see you had a high over here earlier in the morning, and you had a little up thrust, and you had a downturn, and you went down and you shortened the downward thrust. That's what SOT stands for. And then you have this big volume that temporarily stopped the decline. And then the market runs back up. Now there's two interpretations. There's always two interpretations with bar charts. The interpretation one is that we're testing an up thrust, and that this is an up thrust of that. The other interpretation, the bullish interpretation, is that the market is undergoing absorption. Look how it's getting quiet here. We're holding. We had some demand on this bar right here. We had some selling on this bar, but very little downward progress. So we're in a quandary. What is it? Is it demand or is it in trouble? I mean, is it absorption or is it in trouble? Watch. Now what do we see? Now this volume is constructed from 5-minute closes, and the wave retrace setting is 5 cents. So in other words, as long as the market is closing 5 cents higher or not 5 cents lower, this is all considered part of an up move. And you can see here we had a high close, but we equal that high close here. But what else do we see on this chart? We see that on this up wave, we have 52,000 contracts. and we didn't make a new high. What does that mean? That's just like what we saw on the tape reading chart. But we didn't go to a new high as we did on the tape reading chart. But we go up on 52,000 and we're not able to make a new high. And then the next upwave is only 9,000. And that's the lowest amount of upwave volume since the day became active in here. This is pre-session data. And then it goes down on 33,000, which is the second heaviest downwave on the chart. Well, it didn't make that much progress, so maybe you think it's going to hold. But look at the volume on the upwave. There's no demand. That's the smallest upwave volume on the entire chart. That's the feather's weight. Remember in Wyckoff's tape reading course, and I can't quote it exactly, but to paraphrase, he said tape reading, I say chart reading, is a study of force. It requires the ability to judge which side has the greater pulling power. And just as in the life or in the life of an individual or of a business, there comes a moment where a feather's weight will determine the outcome of the situation. And this is the feather's weight. We're not supposed to go up anymore. And look what we did. We went down on a mere 15,000, but look at the demand. Another feather's weight. There's still no demand. And then look at this bar. This bar shows you the wide open breakdown below here, and you can see the bar volume. I don't mind looking at bar volume. This bar volume is very heavy, and it started a 70,000 contract break. And that was just the start of further weakness that day. So I'm looking at this kind of wave volume. I'm reading not only the bar chart, which I do, I'm also reading the wave volume. All right, let's go on. Now this is a daily chart of SLV, the silver ETF. I think I showed this chart when I spoke in San Francisco a few years, but I did it on a bar by bar basis. And look at the change in behavior. Look at the volume on those five down bars. There's nothing about those 5 volume bars that's outstanding. But look at the total cumulative volume on that downwave. It's 77 million shares, more than any downwave since we lifted off from this low. And look at the volume on the upwave, 28, 18, and 19. There's not much demand. And the whole story on this chart is beautiful. Look here how you have a climactic upwave, you have a climactic price bar, you've got shortening of the upward thrust. On this bar right here, which by itself looks like about, it's one wave. That day is one wave. It's 22 million shares, and that is the biggest amount of volume, both actual volume and wave volume, on any down bar since we turned up from this low. So that was the buying climax, beginning of it, and then this vertical bar. Anyway, and look over here at the liftoff out of this base. Where's the bullish change in behavior? Right here. We lift off on 49 million shares, more than any of these upwaves. And look how we come back, down on 30, down on 13, down on 6 million. There's no more supply. It's the feather's weight. We are about to explode. That's what I wait for. I look for the big volume, the large volume bullish or bearish change in behavior, but I'm most interested in those low volume pullbacks to pull the trigger. All right, let's go on. Okay, this is what happened in SLV. This was a little tiny upthrust by about 7 or 8 cents. And we went down in SLV and silver until late 2015, I think about $13. And this was the top in 2012. All right. You can see how we came down on 119 million, and we tested it on 10 million, 17, and 12. So the selling was drying up. So we had we would do a bounce right here on 75 million. That was the biggest upward volume since the high up here, before the high. But all we did on that rally was come up and test this vertical breakdown. As a trader, the things that I'm looking for, just in price action and volume, first I like to trade springs and I like to trade up thrusts, if I can recognize them. Next, I want to trade tests of vertical breakdowns and breakouts. And then, of course, using the Weis wave, I'm looking for those bearish and bullish changes in behavior followed by low volume pullbacks. That's the essence of what I do. All right. Now look at this chart. This is a copper continuation chart. The wave size is 5 cents. Now, the volume here on this chart is 870,000 contracts. The volume, these numbers are times 10,000. You see, we have a spring here in May of this year, and we have the most amount of upwave volume on this chart from the February high. We come down on 49 and we come down on 46. Look at the volumes in here. Do you have any indication from these daily volumes how much demand came in on that upwave? There is no evidence of how much demand came in. So cumulative wave volume is very revealing. You can see, springs are often created by shortening of the downward thrust. If you draw a reverse trend line off this low and this low, you can see the shortening of the thrust. And this is the heaviest downward volume since way over here. So there's a lot of effort, but not much reward, as evidenced by the shortening of the thrust. Now look at this chart. This is a point and figure continuation of the same chart. This is the February high, which we saw a minute on the bar chart here. There's the February high. And you see we've come down, and the volumes here are also times 10,000 shares. And we didn't see that overtly heavy upwave volume on this chart, but we really saw where the selling pressure dried up. And you see I've got the wicks on these point and figure charts. So I can see that, for example, right in here, we had a little spring of this zone down here where we didn't have a spring here. But just seeing that volume dry up, and then look at the ease of movement on this upwave on 460,000 contracts, and look how the supply dries up. It's only 6,000. And again, it's only 6,000. So copper has been doing very well. I don't know what it did on Friday. I don't remember. But anyway, let's go on. Now, another thing that I look at besides bar charts and point and figure, and I really find these charts fascinating, and I have talked about these in another venue. This is Renko charts, and there are different types of Renko charts. This is called a mean Renko chart because it reverts to the mean. After every break here on NASDAQ futures is 5 points. And as soon as price goes one tick above that 5-point range, it inverts back to here. It corrects back to here automatically halfway, and then it continues up. All right, but look at the wave volume on this chart. When you look at a Renko chart, first of all, these breaks are built just on price. Time doesn't have anything to do with the construction of these bricks. They can be 30 seconds or they can be 30 hours. Obviously, a 5-point brick size on NASDAQ futures is not going to last that long. You can see on this chart that we started here around 9:30 in the morning, and we might be at 11:15 or 12 over here. I don't know. But the three things that I look at on a Renko chart. First, I look at the wave volume, and this software shows the wave volume and the minutes per wave. So this is in thousands. So this is 23,000 contracts in what is that? 15 minutes, and then 18,000 in 23. But besides the wave volume and the duration of the waves, I also look at the break volume. This is sort of like looking at a point and figure with the volume per X and O. But I even have more information, which I'll show you later. All right, and then the other thing I pay attention to is the wick. These charts do have wicks. So if you have a 5-point mean Renko chart, with the wick you can double the size and be 10. Net maximum movement from the low to the high or from the high to the low. So these wicks show you that the sellers attempted to take it down and the buyers overcame it. These are failed opportunities by the sellers, failed opportunities by the buyers. But now let's look at the message of the wave volume. We go up on 23,000. We go down on 18,000. We go up on 30,000. So we have more demand. We go down on 24,000. We go up on 6,000. What do you think it's going to do? Anybody want to guess? Bruce, are you there? Well, anyway.
I'm here.
Anybody want to guess what it's going to do? I have a little quiz at the end.
Christopher says it's going to go down. Eric says down.
Right.
Jesus thinks it's going to fall. Michael, down.
That's good. That's good. And it's pretty obvious.
A for the day for them. Should we give them an A for the day?
Yeah, definitely.
Yeah, okay.
You see, we have more selling on this downwave than any of the previous downwaves. And we have less buying on this upwave than any of the previous upwaves. And lastly, you can look at this bar, this break, and you can see this is one of the heaviest volumes on a down break. We have only one heavier, and that's right over here. Notice another more subtle thing. This is 74 minutes. This upwave is, what is that, 16, and 23 is 39, and 38 is 77. 77 minutes from this low to here, and 74 minutes to here. So the pressure has been steady. Of course, most of it came in here on that last break. So it's definitely going to go down. And look what it did. From that one break there, you can see by the low volumes here that it's moving very fast. There's more time on that break than any of these breaks. And we go down on 23,000, up on 11. What do you think it's going to do now? It's a little more subtle, but we go down on 24,000. We go down on 23,000, 74 minutes, 44 minutes, and now only 17,000. And it's only 16 minutes. And we go up on 12,000, which is bigger than this one and this one. And that's not overtly bullish, but look how much demand came in that up break. And look how little supply on this one break down wave. I don't have what happened from here, but I'd bet we have a chance to go up. Not necessarily to a new high, but some movement on the upside or some attempt to. All right, let's go on. Now look at this chart. This is an S&P from last year. You can see when you draw lines on the chart that you do have springs. You see, this is in thousands of shares, and this is the other part of it is in minutes. We go up on 32,000 and down on 7,000. That's the test of the spring. It lasted a full minute. And then we go up and look at the break, look at the wicks right here. Look at the repeated attempts to take it down, and the buyers overcame it. And look at the volume on this break as we broke out above that high. And then we go up on 120,000. And where's the bearish change in behavior? Right there. There's more selling here than anywhere, 171,000. And these little dots I put on these, this is a custom indicator, but they show when you have a maximum movement. In this case, the break size is 1 full point. So this means that these breaks are 2 points with the wick. And it took 64 minutes and 171,000. You can definitely see that the force of the selling is over overcoming the force of the buying. And now look at the upwave here. We got an upwave here on 58,000, which is pretty good, but nothing like 120. Then we set back on only 20, but we had gone higher and reversed. The next upwave is only 15,000. I'm not even going to ask. Everybody here knows what's going to happen, right? And you know what day this was? This was October the 26th, 2016. You probably don't remember that day by date, but that was the day Mr. Comey, the FBI director, announced his second investigation of Hillary Clinton's emails. And from that point, the market dropped to 2120 in 15 minutes, straight down. Many of those breaks were less than a minute. Most of the time on that break was in this right here. I think that was 14 minutes. Or no, it might have been a little less than that, 10 minutes maybe, I forget. But I'm not showing the down wave. But it's overtly apparent that somebody was getting short here. I'm not saying they knew that Mr. Comey was going to do that, but it's certainly suspicious that all of a sudden there was this much selling and drying up of demand up here on these up thrusts. All right. Now look at this stock. This is Facebook. This is a 20-cent mean Renko, just intraday. You can see the volumes here times 10,000 shares. So the market lifts off here on 350,000, and it comes back down on 760,000, more than any of these down waves, but it doesn't make a new low. There's a big effort here, and there's a big effort here with a higher support here and here above this low over here. So we're making higher supports with big selling efforts, and they're preceded by the biggest upwave on the chart. So this is demand, and this is large effort with little reward. And look at the action on this break. Look at the reversal action with the big volume. And up we go. And then up here, what's going to happen next? This is 1,940,000 shares. And what's going to happen now? We have close to over 900,000 shares on this break, and we have 650,000 here. We've got 1,000,005 on the first two down breaks, and big wicks where they tried to reverse it and the buyers couldn't hold it. The sellers overcame it. It's obviously going to go down. These are great charts. All right, now this is something different. I'm getting towards the end of these different charts that I wanted to show you. But this is a range bar chart. I don't look at range bar charts during the day. I usually check them out at the end of the day if I want to see if there's some information on a chart that might be clearer on this chart or on a volume bar chart. Now this is a pretty small range bar chart. And when you have a small range, every one of these bars has a range of 20 cents. And the wave retrace is 10 cents. The problem is, if you have a small range bar, it moves very fast. But you can see the 465,000 contract liftoff and how there's absolutely no selling pressure here. So this is an overtly bullish change in behavior, and it was preceded by a spring, and you see there was big effort on that spring, on that move to a new low, and no follow through as it snapped right back up. Part of this is on the opening that makes it so fast, but then it settled down quietly, and we went up. So these bars, all of them either close on the high or they close on the low. And the duration of these bars can be anything, 1 minute, 1 second, or a whole day, just depending on the size. But I do like to look at these because sometimes they give me insight, like on this S&P chart recently. Now this is, this is a pretty big range bar chart. This is 5 points. So we've got a number of days here on the line you can see. And you can see the great ease of upward movement in here. Look at the volume that comes in here, 476,000. And you can see the upthrust here. And look how much selling came in here and here, and how little buying. So, you know, these are pretty useful at times, but as I said, I don't look at them much during the day. But this was certainly telling us on Thursday that we had or Wednesday, we had a problem developing in the S&P. All right, let's go on. And this is a volume bar chart. I don't like charts that are where every chart has the same volume, but this is Dow futures. And every bar is 12,000 contracts. That's pretty big in the Dow. If that was on the S&P, it would be a few seconds. But on the Dow, it's a pretty good amount of time. If I put volume down below, they're all going to be 12,000. So if you have a 1-bar wave, it's got volume of 12,000. But sometimes they're not just perfect. Like this wave right here, 1, 2, 3, 4, 5, 6. 6 times 12 should be 72,000, but it's only 65 because sometimes it just doesn't add up right. But this is a great chart because you see you had a little spring here. You went down on 48,000 in only 24. And look at the great ease of upward movement. Look at those, you know, I said earlier, I like to see tests of vertical and or high volume liftoffs or breakouts or breakdowns. And you see how you come back into that area. And look how the volume dries up. That's really a great place to get long. Wyckoff, we call that the springboard. And this is absorption. You break out above the high and you keep pushing a little higher, and all the lows are higher and the downwave volumes are no great increase in supply. And that was a precursor to a move that went up to last week's high. This was the July 24th low down here on the Dow. So anyway. And lastly, I don't have intraday charts of this. This is made from Metastock. All these other charts are from TradeStation. But this is equivolume. Equivolume was created by Richard Arms, who was a Wyckoff, or who is a Wyckoff student. And it was his idea to make the width of the bar a function of the volume, which is a great concept because it shows ease of movement and it shows effort versus reward. For example, you can see how the demand, looking at the narrow price bar, you can see how demand just dried up. The only problem with this chart, it doesn't show the closings. The closings are not necessarily on the high or the low, but obviously they must be higher to be green and they must be lower to be red. But there are some chart services that do have equivolume charts and show the closing price, but this one doesn't. But I marked here, this is wave volume. It's total, and this is the total wave volume on this decline is the heaviest on the chart up to that point until we broke down. And then you can see here on this up wave, there was big effort to go up in early June, and we didn't make a new high. So you knew you had selling here, and you knew you had selling here. This was not this year. This was in 2015, the May, June, July top in crude, which was a great example of distribution, because the way I view distribution is that you have repeated attempts to go up, and you have no follow through. And the reason you don't have any follow through is because someone is using strength to put on a short position. All right, let's go on. So I've come to the end of my presentation. I don't know how fast I've gone or how slow I've gone. But I've got some quizzes here. They're very simple. I'm not trying to trick anybody. This is a no-name chart. You remember Bob Evans used to send out no-name charts, and he would say, you know, he would give the answer on the next page, or they were on cassette tapes. This is a 30-minute bar chart. I didn't put the wave line, and the volumes are in thousands of contracts. It is 24 hours, as you can see. So what do you think it's going to do? Is it going to go up or is it going to go down? And we don't want to just read the wave volume. We want to read the chart too. What on the chart tells you what we're going to do? Any answers?
So let's see if we get some. Okay, so Christopher says go up. Mark says up. Tom says up. Michael says down. Thomas says up. And Caleb says spring go up.
Yeah, that's right. Let me see if I can draw on this thing. I can't seem to.
On that little tab that's there on the bottom, I think, I can't see it, but there should be the bottom button should give you drawing tools on the little tab on the right.
I did touch on it.
Shoot.
Let me see.
Unfortunately, I can't see that part of your screen.
Well,
you do have a drawing tool.
I know. I've got them here.
Yeah.
I've got them here. It says pin.
And then it should pull down a little menu which gives you a choice of different tools, pen or spotlight.
Yeah.
Or.
I've got that. I've got all that. I got those tools, and I highlighted pin. Yeah, anyway, somebody saw the spring. Obviously, if you draw a line across this low, you can see we went into a spring position. We went down here on 703,000 and only 35,000 here. And then we have demand, great demand, more demand than on any up wave on this chart. And this is the first pullback, and the second pullback is a spring here. So this spring this is a test of this spring, and on the test we have another spring right here. It's something I like to see. It's not rare. And so this says the market is going higher, except it's not going higher. There it is. That's what we did. The lines are drawn there. So you can see quite clearly what we did. And another spring right in here. And it's testing that vertical area. Another little spring right in there. You go up on 1,276,000 shares of contracts and only 122,000 down. All right, now this is another Rico chart, but this is one that I didn't show you. This is some software that puts the wave volume on top and the minutes per, not wave volume, the break volume on top and the minutes per break underneath. So it's like looking at a point and figure with the volume and the minutes per X and per O, which is really almost a quintessential tape reading tool. And so these are all in thousands. The wave volume is in thousands and the break volumes are in thousands. And you can see we went up on I guess it's 1,670,000 and 440,000 and only 130,000 and so on. And then we got hit. But the question is, what's it going to do? And this one is a little harder, but not much.
So we're looking for some answers here. I'm waiting for some response. Go up. Kevin says go up. And Christopher, go down. Thomas says down. Caleb says go up.
No, we're going up. And the clue is not so much in the wave volume on this chart, because it doesn't really dry up. But where the clue is look at the action on the last two up breaks. First of all, you have maximum movement, big attempts to go down, creating a spring of this low. And look at the total wave volume already, 330 and 710. You've got 1 million contracts on this upwave right here so far, and it's 64 minutes. You see? So we are going to go up. Look what we did. And we went up on 2.32 million. No, 232,000. These are in thousands. Okay, this is a 5-year note. And look here. What is this behavior? Does anybody have any idea what this behavior is? Notice it. This is the biggest volume and the most amount of time. This is 73 minutes at 68,000. What's going on here?
I think of that as absorption.
That's exactly right.
Yeah.
If you draw a line across this high, this is where the sellers come in and try to reverse it. The sellers are trying to turn it back down and create an upthrust and a whipsaw and drive all these new buyers out. But the buyers are like a sponge. They're taking everything that's being offered. That's absorption.
And then after that, it just goes up on no effort. It just glides.
Yeah, it goes very fast, you see.
Yeah.
You've got breaks here that are less than a minute. That's why zeros.
Mm-hmm.
It just flies up. And then we have some selling, and then a big reversal, and then there's more absorption right here against this high, and we go up. They really tell a story. All right? Last chart, last quiz. This is a point and figure. And I'm going to give you a clue. This is minutes. We talked about minutes on point and figure charts. When I didn't have volume, I used to put minutes underneath the columns on the point and figure chart. I found that there is a correlation between time and volume. If you have a lot of time, you usually have a lot of volume. And you can see or let's put it this way, if you have a lot of volume, you have a lot of time. You can see right here, 45, 54, and I don't remember what these are, if they're millions or what we'll see in a minute maybe. And even here, 1,130,000, and look how much time. But what's he going to do? This should be very obvious.
Okay, so we're asking the question. Let's see. Generally, the answer is down.
Right.
Eric, Tom, V-Pool,
Yeah.
Christopher. Yeah.
The Weis wave volume shows you that we have more selling on this down wave, and also this is the largest down wave since we turned up from the low. And then we go up on half as much. And look what we do. That's Google. That's a 10 cent by 30, 10 by 3. Volumes are in 10,000 shares. So this is 1,130,000 shares, and this is 600, and this is 310. And look at the volumes on the up waves. There's no demand. All the volume is on the down waves. Now, right here, we may have a change in behavior because we shorten the thrust, and instead of 600 or 950,000 or 1,000,001, we only have 460. So the force of the selling is diminishing. But you can tell how fast this must be an opening because there's no time. You see? That must be an opening. Well, anyway.
Wow, this is really great. Very good.
These are the things. Here, I've got one more page. Roman said I could show my product.
Oh, absolutely. Yes, this is the most important part.
Well, I don't know that. But
Well, this is how we get to do all this that you just showed us.
Well, I'm a teacher first and a businessman second. The Weis wave works on TradeStation, NinjaTrader, Ninja 8, Metastock, and MT4. How to use it is described in my book, Trades About to Happen. My 4 DVD set was from a trader's camp in the Dominican Republic with Alex Elder in 2007, and it shows how I go about reading bar charts. I also do mentoring, 12-week sessions over Skype. So if there are any questions, feel free to ask.
So we have time for a question or two, and I just like to add that, of course, you know, David, I think you're just one of the Wyckoff statesmen, and you're such a wonderful teacher, and you're so open and sharing, and we just all love that about you. And I also, our friend Dick Arms is also in the same vein, and is just a wonderful guy. I just adore him too. And Dick's Equivolume is available on stockcharts.com, and I'm trying to recall if it's available intraday. So people, if they want to go explore that, Equivolume is so creative, just as your Weis waves are so creative, and we just love the way that you both have added to the body of knowledge of Wyckoff methodology. So I encourage people to go look at Equivolume and check it out, because it's remarkable.
I agree.
Yeah. Okay, let's see if we can do a few questions. Oh, there's many, and so many compliments. So is the wave volume total volume on the wave, or something like on balance volume? And this is from John.
No, it's cumulative. Let me show you. All right. Like on, let me go back to that Kudo chart. Well, like on this chart, I'm adding up all of the volumes from each bar until there is a reversal of 5 cents based on daily closes. And we had all of these bars, some of them closed down, but not 5 cents. And so it just keeps adding the volume until right here, we had a 5 cent lower close. And then you know that this wave right here has ended. That's how it works.
Another question, can we apply the Weis wave to the stocks we trade?
Absolutely. I showed it to you on, yeah, definitely.
Good.
If I can go to, my trade station, I can bring up, but anyway, I guess you have other people to talk to here. So no, yeah, it can work on Forex with tick volume. It'll work on any chart with this volume. ETFs, stock. I mean, I showed you SLV. SLV is made from daily closes.
Yeah.
Works on that.
The silver ETF.
Yeah, it works on futures, Forex.
Another question here is, does this analysis work on larger time frames such as daily for those of us who cannot watch the market hour by hour?
Definitely. I think the best money in the market is from trading the swings on the daily chart. I mean, if you couldn't understand the message here, and then as the selling pressure dwindled down, and you didn't know what to do right here or right here on the breakout, yeah, it definitely works this way. You can do it. You don't need to watch the 5-minute chart.
So here, here's some comments from Grant. Great, that was worth the price of admission. And
well,
thank you, David, for the awesome webinar. So, and that's from Caleb. And it's we so appreciate you being here.
Well, it's
So,
my pleasure. I enjoyed it.
and please, everybody, go look at David's website. And one last thing from me: rumor has it that you're working on another book.
Well, I am working on a little bit, but it's not there yet. Believe me.
Okay, well, we're not pressing you, but I'm speaking for all of us that when your new book comes out, whenever that might be, we're all going to buy it.
All right. Well, that's very nice.
That's my commitment from everybody here.
Well, thank you.
So just this is added encouragement. So
Thank you.
okay, thank you, David.
All right, y'all take care.